Hey everyone, Intel reported quarterly financial results that sent the stock price crashing by more than 20%. I was especially disappointed in these latest financial results because I've had Intel stock rated as a buy all year long in 2024. It's been one of my more disappointing stock picks for the year. Now I'm going to review the latest financial results from Intel and I'll update my recommendation for Intel stock. Am I finally downgrading Intel stock off of my buy list, or does the stock price decrease offset the decreasing prospects for Intel longer term? I'll share those details with you in this video, so let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
In the second quarter, Intel reported revenue of $12.8 billion, which is down 1% year over year, and that was worse than what Wall Street was expecting, although it was in line with what Intel told investors it would deliver for the quarter. Second quarter GAAP earnings loss per share was 38 cents. The company's been losing money on the bottom line for several quarters as it's investing aggressively to catch up to the latest generation technology. Remember, if you've been following Intel for the last decade, you'll know that they were behind in investing in technology, and that's what left them behind industry-wide, and now they're trying to play catch up, investing aggressively to meet this rising demand for artificial intelligence and the replacement cycle for personal computers. The company's forecasting third quarter revenue of $13 billion at the midpoint, which would be a slight increase from the $12.8 billion it reported in the second quarter. It expects losses to continue on the bottom line, but to decrease to 24 cents, down from 38 cents in the previous quarter. Now, to offset these disappointing results, Intel is cutting costs meaningfully. It's implementing a massive reduction, cutting more than 15% of employees to resize and refocus. Also, it's suspending the dividend starting the fourth quarter of 2024. And I think the dividend pause is one of the major concerns from Intel stock investors. Many passive income investors rely on that dividend, and when a company pauses or cancels a dividend, it really discourages those passive income investors that typically sell the stock and replace it with something else. They feel more confident in receiving their passive income. The CEO saying that the second quarter financial performance was disappointing. Even as we hit key product and process technology milestones, and the second half trends are more challenging than we previously expected. We are leveraging our new operating model to take decisive actions that will improve operating and capital efficiencies while accelerating our IDM 2.0 transformation. The company has been investing aggressively, like I mentioned. They're also launching the semiconductor business, where they will be a fabrication company outsourcing or manufacturing outsourced semiconductors. That means they're going to produce semiconductors that are not Intel branded. And so that's going to help facilitate greater demand to use its manufacturing facilities. And so it's investing to expand its manufacturing facilities in the tens of billions of dollars. Now, I've liked their capital allocation strategy with this build out. They're capitalizing on government incentives, which is making it billions of dollars cheaper for Intel to expand these manufacturing facilities, and they're partnering with other firms to reduce the cost, the capital intensity of these build-outs, and I'll talk a little bit more about that later in the video. So these actions that Intel announced earlier, including structural and operational realignment across the company, headcount and operating expense, that will lead to reductions in more than $10 billion in 2025 compared to previous estimates. So those lower costs will help the company generate better profitability regardless of where the revenue line item comes in. They're also going to reduce capital expenditures, which have been rising meaningfully in recent years. They're going to reduce their gross capital expenditures in 2024 by more than 20% from previous projections, bringing the gross capex between 25 and 27 billion. Intel expects net capital spending in 2024 between 11 and 13 billion. So you'll notice the difference between the 26 billion in midpoint in capex and the 12 billion in net capex. The difference between those two are what I was talking about earlier. Intel might be spending that much money, but that's not all coming out of its pocket. The US government is offering billions of dollars in incentives to Intel, and Intel is also partnering with other firms that are providing the company with capital to help build these facilities. In 2025, the company is targeting gross capex of 21.5 billion at the midpoint and 13 billion net at the midpoint. So again, Intel will be helped in terms of their capital expenditures by the government and by other firms. Thankfully, cash flow from operations remains positive for Intel. In the 6 months ended June 29th, the company generated 1.069 billion in cash flow from operations. That was up from 1.023 billion in the same period in 2023. So most of these losses on the bottom line, the negative earnings per share, are these non-cash expenses and restructurings and all of these different things that Intel is doing to facilitate the changing business model. Still, if you just look at cash flow from operations, solid 1 billion generated in cash flow from operations, and annualized that it's probably 2 billion if it continues at this pace, even though the company's net income was negative 2 billion. So the good news is it's not losing money in cash flow from operations, and it is generating cash, but not enough for all of its additions in property and equipment. You'll see here that even though it decreased, the additions to property, plant, and equipment totaled 11.6 billion in the most recent 6 months, and that was down from 13.3 billion in the 6 months of the same year, of the same time last year. But compare how much cash it's generating in operations, just 1 billion, and it's spending 11 billion and 13 billion the year before. So it's spending way more than it's generating in cash, and so you can understand why it needed to pause the dividend, because it does need to conserve cash in order to use that money for their capital investment, and they need to catch up on technology. That's why they feel like they need to persist in their capital investment. Now, I highlighted that Intel's stock price has fallen significantly. It's now trading at a forward price to earnings of just 11.83, the lowest it's traded for according to this metric going all the way back to early 2022. But the stock price is down over 57% on the year. As I mentioned earlier, it's been one of my worst stock calls in 2024. But at this valuation, and with their price cuts, and with the upcoming demand cycle, the replacement cycle for semiconductors, I still like Intel stock at these valuations. I like it a little bit less following these latest quarterly results, but I still feel the thesis is in place. It's investing to capitalize on this opportunity that exists, that we're seeing from several different sources, and it's investing to capitalize on that lucrative opportunity. Now, it's going to be messy when you're investing that much money in the expansion of the business and the shift in the business model. That's going to be messy. It's going to be choppy. The timeline might be shorter than expected or longer than expected. Of course, you would prefer it to be shorter than expected, but in Intel's case, it's being longer than expected, but you're getting a reasonable price to take this risk. You're paying a forward price to earnings of just 11.83 to take this risk, which is, I think, a reasonable valuation considering other manufacturing companies and what you're paying for similar companies in the industry. So I'm keeping Intel stock rated as a buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.